Good evening. Just a stock market update here on May 19th. We have three things we're going to talk about real short here, short video. One would be the short-term outlook for the market. Anything more of a significant drop here would be unprecedented. You don't have, Russell's down 30% from its high roughly, and you had Russell down about 40% 2 years ago. You don't have a 40% drop every 2 years. That would be unprecedented, pretty much going back, you know, the recorded history of the stock market. So anything further significant here would be unprecedented. That's not to say it couldn't happen, but if you're wondering if stock market's acting kind of goofy here, it is. The second thing would be the inflation. Misinformation that's out there. You have people saying that maybe because of low rates or some other factor, you have high inflation and a declining stock market. You can't have both. You can't say that raising rates here would decline the stock market and then play the other card and say that low rates or some other reason is causing high inflation. You can't do both at the same time. So whatever's behind the high inflation right now, they can either run its course or flip that switch, but that's not the reason for you just can't have the high inflation and declining stock market playing off of each other. That's not how the situation works. Typically inflation is adjusted by interest rates and other factors, but if the Fed will weigh the two. They're going to weigh, high rates or lower rates and what that would do. But one of them is not playing off the other. In fact, a declining stock market would lead to lower rates. So you could have high rates and high stock market returns and vice versa. But the stock market declining would lead to lower rates, all else equal. So you just don't want to believe that misinformation that's out there right now. And the third point is that a declining stock market doesn't, all else equal, doesn't really lead to great things, all else equal. I think most people are long-term rational investors, but it doesn't certainly, most people are not happy with that, and it really doesn't lead to great things. I think most people bear through that, and that's what's going to happen here. But it's not the ideal situation. It doesn't lead to people doing stuff that's productive for society. No one should be cheering here. The market's going to be headed higher, so we're going to end up in the same spot. Inflation, I think, is more of a question mark. The reason I can't fully address that one because I don't know what's going on behind that. I know partly with oil, you had all these people returning to drive, and I think if you get people to conserve with their gas, that'll cause oil to come down a little bit. OPEC's not the complete story there because they have their numbers of where they want oil. So inflation's a little bit trickier. Of what's going on there. We might address that one down the road if that continues to stay high. I know as we mentioned, inflation can be dealt with partly by interest rates, but with interest rates at zero, that certainly is not the complete reason why inflation has gone higher, because business, someone running a business like a supermarket isn't going to raise prices because inflation's at 0%. They're not really paying that much attention to that. They're not like, Walmart's not like, oh, interest rates are at 0%. Let's raise the price of cookies from $2 to $3. That's not how it works. So that's not the complete story there. So that one's more of a wild card, and we might address that later if that continues to stay high. But stock market down the road's headed higher. So don't believe the idiots out there who are just screwing themselves over. So just bear through it and be a long-term investor.